Hi everyone, welcome back to our channel. Adi here. So before the video gets started, I would like to wish everyone a very good happy new year. So with the starting of the year, so if you want your portfolio investment for month is around 10,000, then you can consider this portfolio and this fund as an investment. So let's the video get started and discuss about this investment portfolio. First one is your Quant large and mid cap fund. So this time we have not put large and mid cap the two different fund. We have put it in a single fund, so you consider large and mid cap category. So this is one first fund is your Quant large and mid cap fund. So it is under Quant Money Manager AMC. AUM has bit lower side, but as it grows it will give you good return. So it's around 439 crore. Expense ratio, if you see, is also good, 0.56%. The good thing is there is no exit load. If you want to exit from this fund, then you don't have to pay any exit load. If you see the the return, it's giving around 27.2% for last 3 years annualized return, which is very huge because considering this is a large and mid cap fund. So we can expect this type of return in general in small cap fund, but in considering this is a large and mid cap, this is a good return. For last 1 year, if you also see, it's giving around 16.4%. So considering the market situation, this is a good return also. So as an investment, you can start with 1500 SIP in this fund. So next we are going to small cap category. So Quant small cap fund. So if you see the AUM, it's okay because it's around 2500 crore. Expense ratio is also okay, 0.62%. So there is exit load. If you want to exit, you have to give 1% exit load within 1 year. But if you check the return, past return has been huge. Last 3 years giving around 56.1%. So most of aware of this thing because this has been a good return and good fund. Last 1 year also it able to give 12.2%, which is also okay because of the current market situation. So as an investment, you can start with 1000 rupees SIP in this. So the next we are going to go to Flexi cap category. So this is I did the analysis about Parikh and PGM. So I thought Parikh will be a good investment, though it's not able to give good return for last 1 year. But this has been a good fund, and the only thing is here is your AUM, which is very huge, 28,500 crore. So only thing is how much AUM it can grow, because generally it's a fund able to give you good return when the AUM grows. When there is more investment, they are able to give you good return constantly. So here if you see the expense ratio still okay, 0.76%. But the return, if you check, it's last 3 years it's able to give good return, 22.3%, which is good. But last 1 year, as I mentioned, PGM India or Parikh both are in minus. So it gives around minus 5.5%. But this fund has been a good fund and it is expected to grow more. So I put this one in the Flexi cap investment category. So you can start with 1500 SIP in this fund. So next is your again the Flexi cap. So Quant Flexi cap fund. As you know, this has been most of the Quant fund has giving good return for last 3 years, 5 years. So this is under Flexi cap category. AUM, if you see, still a bit lower size, 825. As I mentioned previously, once the AUM grows, it will give you constantly good return. Expense ratio is okay, 0.58%. Again, there is no exit load. So most of the Quant fund there is no exit load, which is a good thing. If it is not performing, then you can exit without giving any extra fees. So if you check the annualized return, it's giving around 38.4% for last 3 years. Which is huge because if you see Parikh PGM, there are around 22 to 23% for last 3 years, but this been giving 38.4%. So if you see again, the last 1 year it's able to give you around 14% return. If you see the Parikh and PGM, they are in minus. So we put two Flexi cap fund because we don't want to more concentrated on one Flexi cap fund. If that doesn't do well, then all our investment portfolio will go down. So we put two Flexi cap fund here. This is Flexi cap fund, Quant Flexi cap fund. You can put 1000 SIP. Then we will move to the multi cap fund. Again, Quant active fund, which is under multi-cap category. It's also giving, if you see the last 3 years, it's giving around 37% return, which is, I mean, very good considering, I mean, its peers, which is, I mean, not able to give that much return. So last 1 year also it's giving 13.2%, which is very good. AUM is also okay. If you see 3,500 around, which is good. Expense ratio, if you see, it's around 0.58%, which is same as your Quant Flexi Cap fund. And again, there is no exit load. So in this multi-cap category, in this fund, you can put 1,500 as an SIP investment. Again, we put 2 multi-cap because you don't want to again concentrate on one multi-cap. Similarly for Flexi Cap also. So this one is, I mean, if you are not, most of them may not be aware of this fund, but this has been a good fund for last 3 years, giving good return. So this is Mahindra Manulife multi-cap Badhat Yojana. So this is under Mahindra AMC. If you see, the AUM is also okay, 1,500 crore, and expense ratio is also good, 0.42%, under 0.5%, which is very good. Exit load 1% if you redeem it within 365 days. So if you see the annualized return, last 3 years it's giving around 23% annualized return, which is very good. Last 1 year also it's able to give 4.4%, which is still okay. I mean, just below the category average, but still okay, because last 3 years if you see, it's giving good, more than its category average. So as an investment, you can start with 1,000 rupees SIP. Next we are going to give with the tax saver fund. So Parikh tax saver fund. So this one, as you know, all the ELSS fund are 3 year lock-in period. So there is no exit load, but you cannot withdraw the money within 3 years. So if you see, AUM is on around 1,000 crore, 901 crore. Expense ratio at bit higher side, but still okay, 0.83%, not more than 1%. So if you check the return, it's giving you around 24% for last 3 years, so which is, I mean, good considering this is a tax saver fund. Last 1 year also able to give around 8%, which is good also. Investment, you can start with 1,000 rupees in the tax saver fund, but remember you cannot withdraw this before 3 years. So next we are going to check an hybrid fund. So we just want to diversify our portfolio. It's not like we are just to only concentrate on equity, generally large cap or flexi cap. There we have to diversify. So I put this hybrid fund. So if you see, this was Edelweiss aggressive hybrid fund. This is also good fund. I mean, if you are not aware of this fund, this has been a good firm. You can check and do your analysis, and we check the past return also. It's giving around 27% for last 3 years, and this year also it's able to give 8.2%. So considering the market situation, which is good, I mean, 27% for the last 3 years, which is very good. So expense ratio is also okay, 0.51%. I will consider this in a good one. If you start investment, you can put 500. We don't want to put much money in a hybrid fund, so 500 you can put in the hybrid fund. So next we are going to check the index fund, because generally, as I mentioned, we have to diversify our portfolio. So we need to put some fund in the index fund or ETFs. So this is Tata Nifty 50 index fund. So this is on the Tata AMC. I do the analysis and compare it with other Nifty 50 fund, which is lowest expense ratio like NABI, or good fund like UTI Nifty 50 fund. But this has been a good fund, Tata Nifty 50. So if you see, AUM is, it's still a new fund. So AUM is at lower side, 339 crore. So expense ratio is very good, 0.16%, which is very good. Exit load, if you, I mean, redeem it within 7 days, is have to give 0.25%. So considering, I mean, most of them, I mean, if you are investing, this is a long-term fund, this should not impact. So if you check the return, it's around 15% for last 3 years. And this year also it's able to give 6.5%, though I mean, Nifty has gone down and gone up, I mean, it's volatile, but still it's able to give 6.5%. So you can put 500 in this fund. So now we are left with 500 only. So as I mentioned, we need to diversify our portfolio. So currently all our 9,500 investment are in Indian market. So the 500 we need to diversify it to US market, because I mean though US market is down around 30% 40% currently, but we can have small amount of allocation to US market also, which it's not like market will go down forever, it will go up. So we need to have some exposure to the international fund. So I just put last fund in this 500 is your Motilal Oswal Nasdaq 100 fund of funds. So this is being a global fund. It's generally put your money in Nasdaq 100 ETFs. So if you see, AUM is also okay because it's around 3000 crore. Expense ratio is very low, 0.1%, and there is no exit load. So if you check the annualized return last 3 years, it's around giving 13.2%. It is giving good return because last 1 year it's around minus to 26.4%, because all of you are of the US market. So that's why last year's return has gone down also, but it's been giving good return. One of the good fund under international investment category from India. So as an US diversification, we'll put 500 SIP in this global fund. So this is our complete portfolio of 10,000. So if you are okay with this portfolio of allocation, you are if you analysis, you can do your own analysis, and if you are okay with this, then you can start with this 10,000 portfolio of investment. Just remember, this is for your aggressive type investor. For moderate or conservative, this is not the portfolio you should follow, because this is basically most of them, you can say all of them are in equity. So if you are aggressive investor, you should consider this portfolio. So I hope you are now, with the start of new year, you are not aware of how you can invest your monthly SIP in mutual fund and grow your money. So if you like this video, please hit the like button and subscribe to the channel. Thank you everyone.